Hi, everybody, and thank you for joining us. I'm Janet King, Vice President of Research at Arizent, which is the parent company to the bond buyer. In today's conversation, we'll draw on results from research conducted by the bond buyer in partnership with Assured Guaranty and expert opinion from our panelists to explore how ESG fits in the muni industry. If you have questions, please feel free to enter them in the platform throughout this session. You will also have an opportunity to download a copy of the research slides at the conclusion of the event. So let's get started. Next slide, please. As environmental, social, and governance investment considerations have grown around the globe, so has interest in the muni market in ESG. And in fact, according to Refinitiv data, $17.6 billion worth of ESG bonds have been issued in 185 deals as of September 30th of this year. That figure already surpasses the $16.6 billion that was issued in 91 transactions in all of 2020. Compared to annual municipal issuance, those figures are still small, but growing, with ESG representing 3.4% of annual municipal issuance in all of 2020 and 4.8% year-to-date 2021. But incorporating ESG into the municipal industry is complex, and the opinions on how to do that or whether to do that vary to a large degree, depending on the vantage point from where that participant sits. Next slide, please. To help us explore those various vantage points, we have a really great panel joining me today, so let's introduce them. First, we have Randy Gerardis, who's the Managing Director at Assured Guaranty. Welcome, Randy.
Thanks, Janet.
It's great to have you here. We also have Tom Chan, who's the Senior Credit Analyst at Refinitiv. Hi, Tom.
Hi, everyone. Hi, Janet.
Also joining us is Jay Goldstone, who's the Chief Operating Officer for the City of San Diego. It's really great to have you here today, Jay.
Thank you. It's good to be here.
And finally, last but not least, we have Karen Daly, who's the Senior Managing Director from Kroll Bond Rating Agency. So thank you, too, for joining us, Karen.
Thank you, Janet. Great to be here.
Excellent. Well, I am excited to get started. So if we can go back to slides for a minute, I just want to provide the audience with a bit of context for our discussion and just tell you about the research that we'll be discussing today. So this was an online survey that we conducted among the bond buyer audience between August 18th and September 9th of this year. Among some of the core questions that we wanted to address were how important ESG is perceived to be to the future of the industry, what impact ESG is expected to have on growth, and what kinds of additional guidance or support would improve the ESG designation. In total, we had 187 muni market participants and observers complete the survey. So it's good, robust survey base to sort of frame our conversation today. So looking at our next slide, if we start at the top and take a look at overall market sentiment about the importance of ESG to the muni industry at large, we see that about half, or 56% of our respondents to the survey, say that ESG is critical or very important to the municipal industry at large. And we had about another third who report that it's somewhat important. Notably, we didn't see any significant differences in this opinion based on the type of organization or market role, which suggests that most market participants, regardless of where they sit, agree at least on one thing, which is that ESG will have an important role to play in the industry overall. But if we look at our next data point and we take that one step further on the next slide, and we break out the E, the S, and the G, what we see is that 73% rated the environmental as critical or very high in importance, whereas just 50% assigned the same high level of importance to the social piece and 60% to governance. And that's interesting because in keeping with that split, I recently saw a report on a survey of fixed income investors globally that stated that green bonds are the most invested ESG asset class, followed by social bonds and then sustainability bonds. So I think the bottom line here is that we seem to have broad consensus, at least, on the importance of ESG to the muni industry, with that environmental piece leading in importance. So I'd like to turn to our panelists because you all occupy different vantage points in the market. So I'd like to have each of you provide your perspective on this topic. And more specifically, I'd like you to comment on two things. I'd like you to tell us how you view the importance of ESG to the industry overall, based on where you sit and what your role is. And also, I'd like to get your thoughts on the environmental piece and whether maybe that is viewed as the most important and the most widely invested because of how tangible the effects of climate change are. So why don't we start that off with Randy today?
Thanks, Janet, and thanks to the bond buyer for having me join this panel. We were obviously, as Assured Guaranty, was extremely pleased to help sponsor this particular survey of investors. And what I've seen here recently joining Assured over the last year is, even within our own organization, as a corporate citizen and also having an asset manager on our own, in addition to our financial guarantee business, we certainly discuss ESG issues almost on a daily basis, whether it's when we underwrite a transaction for insurance, financial guarantee insurance, and it's in an environmentally prone area such as a port, for example. We spend a lot of time trying to understand not only what the current situation is, but what the future implications are. We take 30-year risk without the ability to change our minds on that particular risk. So we spend a lot of time trying to look at what's going to happen sort of in the future. Even beyond that, with our investors, both from an equity standpoint, when they're looking at our stock price, for example, or if we're looking at investors, certainly in our fixed income assets, we spend a tremendous amount of time across our organization trying to understand some of these issues. So I think, from that vantage point, it's certainly something that I think is at the top of mind for investors. And, when I think of, the results here, I'm certainly not surprised. I mean, not only in my career now, but in prior lives, which many, hopefully, I'll get to see some of you folks on the other side of this camera at some point. Investors have been talking about this for quite some time, both overseas, but also in the United States. And I think the environmental side is so tangible because we're seeing so many more, which seems to be frequent weather-related events, whether it's wildfires in California, as many of our folks in California who are obviously this is the California bond buyer, are very intimately familiar with wildfires. And it used to be we spend a lot of time talking about earthquakes. I think those still do happen. In fact, when I was in California, New Yorker, I actually had the pleasure of being in the last one. But those earthquake risks were something that people used to talk about. Now it's more wildfires or even windstorms. So there's a lot of just tangible credit-related actions around it, but there's also certainly some sustainability things to think about when you're looking at what the future looks like going forward. So I think the environmental sort of aspect is so much more tangible, but I know we're going to talk about some of the S and the G, and I think there's a lot to discuss there, and maybe not quite as much agreement. And I think that's certainly something that everyone's looking for. And I think, fortunately or unfortunately, I'm not sure there's going to be an agreement on ESG. And I think that's why it makes it so relevant and why we wanted to participate in asking investors, because ultimately investors and even obviously on the other side of that, issuers are going to be at the sort of tip of the spear in deciding on how we approach ESG within the context of the municipal market. So that would be my vantage point. I'll certainly love to hear the other folks on the panel, how they feel about it. So I'll yield my time at this point.
Thank you. Karen, what are your thoughts on that? I mean, how are you thinking about the importance of ESG to the industry moving forward?
Thanks, Janet. It's great to be here with everyone today. ESG is a theme in the capital markets, especially for investors, has gathered momentum faster than anything we have seen in decades. It is top of mind for analysts, issuers, and again, investors. In particular, interest in the environment and related topics has grown exponentially in terms of public engagement. Perhaps it's the daily drumbeat of bad news about climate change that has triggered the intense focus on the environment. I'll share an interesting set of facts with you. The New York Times reported research that suggests that climate change is affecting hurricanes, causing them to weaken more slowly and remain destructive for longer periods of time. It found that while 50 years ago, a typical storm would have lost more than 3/4 of its intensity in the first 24 hours when it might travel several hundred miles inland. Now it would only lose about half. That finding poses all kinds of challenging implications for credit risk. Another slice of this topic is the issue of cybersecurity. The pandemic has led to expanded work from home options for all levels of government employees, which increases the points of entry for cyber criminals. So yes, Janet, ESG is incredibly important. The second part of your question is really interesting, and that relates to the whole issue of why is everyone so hyper aware of the environment? And I think Randy alluded to that. It's top of mind because it's in the news every day, and it affects everyone so tangibly. Think about Hurricane Ida, which is the last major weather event that the country experienced. In New York, residents in basement apartments died from the effects of a hurricane that hit 1,400 miles away. These tragic incidents have a sobering effect on people and the clarity of their thinking around the importance of E and ESG.
Absolutely. Thank you. Thank you for that. Well, those are some great examples. And actually, maybe with that, Jay and Tom, I'd like to get your thoughts on the next data point, actually, because I think it's really relevant to the two of you. So if we can just move to our next slide. We've had a lot of conversation about the impact or the importance of ESG, but what's the expected impact on industry growth? And we posed that question in our survey and found overall that 2/3 of the respondents expect ESG to accelerate growth in the muni industry over the next 5 years. And 26% say significantly, and 40% think it will have a moderate impact on growth. So Jay, kind of want to start with you here and learn a little bit about how, if at all, the city of San Diego is issuing ESG designated or green bonds, if you're doing that now or if you plan to. And what kind of impact ESG considerations have for you as an issuer?
Sure, thank you. I look at it from a couple of perspectives. Obviously, as an issuer running an organization, we sort of live ESG day in and day out, regardless of whether or not we're going to issue ESG related type bonds. We have climate action plans. We have different programs within the city that focus on this. The city to date, though, has not issued ESG bonds. Over the past 5 or 10 years, probably like a lot of issuers, we've been trying to catch up on a lot of deferred capital needs and deferred maintenance. And so those are the kinds of projects that don't necessarily lend themselves to ESG. We do have some projects. We've had some small projects that could have qualified, but we haven't seen really the benefit of actually issuing them as ESG bonds. The price differential isn't there to make it worthwhile. Coupled with then the additional reporting requirements that come up either as part of the issuance or post-issuance reporting. We do have a pure water project that people may have been aware of, a $1.4 billion pure water project where we're taking wastewater and converting it into drinkable, potable water. It's in a 2-phase project. Fortunately for phase 1, we have a lot of WIFIA federal loans and grants, so we haven't been out in the market, but that would probably be kind of a project that clearly would qualify. And so, we look at ESG as just one more tool in the tool chest. It's got to have sort of some economic benefit to us. San Diego, probably like some other large issuers, we don't have problems with access to the market. So whether or not we issue them as ESG designations or just regular out municipal bonds, again, if we're not seeing a price differential or any other sort of economic advantage, we're we're probably not looking, at least currently, at doing the ESG. I will add one last thing, and that is, of course, obviously from a political standpoint, it's always nice to be able to say you've issued ESG bonds, and the politicians, elected officials, get to sort of hang their hat on that. We may do ESG related type projects. It's just whether or not we're going to actually issue the bonds with that designation associated with it.
Okay, thank you. Yeah, and I guess, Tom, with so many survey respondents, with Jay's response in mind, and also the fact that we're seeing so many survey respondents expecting ESG to accelerate growth, at least at some level, what do you think that says about how issuers should contemplate or maybe think about using ESG to their advantage?
Sure. I'll just start with stat. I mean, through the 9 months of this year, globally, there was debt issuance for sustainable debt totaling $777 billion. That's up 57% versus the prior year. So there's very strong demand globally for ESG debt globally. I think that really reflects, the mindset that investors are having in terms of, factoring climate as well as social factors in terms of their investments. I think to Jay's point regarding the pricing differential between green bonds or ESG debt versus conventional debt, obviously there hasn't been really a pricing impact at this point. But if you look at globally in the taxable market, there is a greenium or a premium that's paid for ESG debt globally. So whether if that translate into muni market, it remains to be seen at this point. I think what I would suggest maybe possibly for issuers, I think disclosure as well as transparency is something that in the muni market, I think that's something that should or can potentially improve over time. Obviously, that's a way to communicate with your stakeholders, whether it be bondholders as well as regulators, investors, local governments, even the federal government, which is pushing for more disclosure as well. So I think that being transparent is also a reflection of the other pillar, which is governance. Being transparent is a reflection of management as well as their transparency and also their understanding of the risk factors as it relates to ESG. And also, how that relates to the creditor or issuer mitigating some of those risks down the road. I think that's also a reflection of their ability to translate and also improve and monitor that risk down the road as well.
Yeah, and I think you pointed out a few interesting things there, right? Talking just about just the reflection of that super strong demand for ESG globally. And we're going to talk a little bit later about disclosure and transparencies. We've got some interesting data points, and I think some great conversation to come. But if we move forward to our next slide, because I think it builds on what you just pointed out, we also wanted to see how muni market participants felt about whether ESG would attract more interest from international investors. And the majority, in fact, think that it will. In fact, we had 6 in 10 respondents who said they expect some increase in foreign investor interest in municipals as a result of ESG. And that was a perception that was shared among respondents from various types and market roles. So going back to the panelists, because I think this is an interesting conversation, if we consider that the municipal industry lags other markets and that the EU and Asia investor base is further ahead in their mandates for ESG to be part of their portfolios, and I think because taxable municipal issuance has grown in recent years, how should U.S. investors as well as issuers think about incorporating ESG to lure this new investor class? And I'm going to come back to you, Jay, but why don't we start with Randy on this one?
Yeah, I mean, I think you hit on a few different points that are sort of co-varying with this approach on ESG. I mean, first you've had a significant increase in taxable issuance partly related to tax law changes as it related to the ability for issuers to refinance their debt. So they were looking to advance or fund their debt using taxable bonds. We've seen an increase in growth. I mean, if you look at our portfolio, a lot more of the transactions that we do at the Assured Guaranty come as taxable bonds, partly because of the interest overseas. I mean, there's some capital benefits that you get also for on the regulatory regime overseas, with respect to our RAP, increasing the rating on your bonds. Beyond that, you have seen, even on the tax exempt side, it's a small number, but you're seeing international investors even buy tax exempt munis. And so you say to yourself, why would that happen? And part of the story is just simply global rates. Sometimes the tax exempt, even though you're not getting the tax benefit, that absolute yield is even better than they can get in their domestic currency, for example. So you're seeing a diversification of the muni buyer base anyway, both on the taxable side and even, I would argue, on the tax exempt side. So now you have these investors that are more and more looking at ESG, and many, frankly, view munis as very, very ESG friendly. I could make the argument almost, the lion's share of what municipal issuers do could have some sustainability value, whether it's a new building, or you're talking about roads, you're talking about sewer lines, things of that nature, the nuts and bolts of infrastructure that we always hear so often in the sort of public discourse. So I think that you have those kind of factors already at play, and so it only makes sense that you're going to see more interest in the muni market. The thing that I sort of focus on is, and this is really the interesting part of the whole conversation, and I get a little bit of pushback here, but I'll go with Jay, since he kind of said it. We just don't see an actual tangible, differentiation in a bond that's labeled as green versus a bond that's not labeled green. And so I say to myself, well, if everybody wants it so much, how come they're not willing to pay up in a higher bond price for it? And so I think that's kind of the next. Everyone kind of, I think, understands, and I think the survey data suggests this. Everyone realizes that this is important. I think the issuers understand the importance. The investors understand the importance. So the next, tangible sort of, to quote, Jerry Maguire, "Show me the money." And that's, I think, really the question that comes about, because if we are seeing that on the taxable, side, as Tommy indicates, and I agree with that. I think you are seeing that on the taxable side. The question is, when do you actually see the economic benefit? And again, you then say, okay, well, what's different about the muni market? Well, I'll sort of answer one thing. Our technicals are very, very skewed to a situation where it's a bond seller's market here. And so it's hard for an investor to justify giving up any yield when yields are so low and spreads are so tight. So the question is this a market-driven paradigm that will change because of the importance, and when will that happen? I think part of me says that's inevitable. When everyone sort of sees the value, eventually, you're going to see that reflected in price. And so I expect that to happen. The question is kind of when, and I think part of it is the investor equation, and part of it is the issuer equation, because I have heard issuers that, love their green bonds and non-green bonds equally, and they don't necessarily want there to be a difference between an issue that they want, that's green versus not. And so there's that interesting thing. So I'm very fascinated. It's all pose sort of a question back as I sort of, end my comments is, when do we see the economic, change to show that, investors are willing to pay up for that designation, or for a bond that fits into their paradigm of ESG? Because I'll leave one last thing. Everyone else's definition of ESG is different, and what they're looking for in their ESG is completely different depending on, the organization they participate in. So that's kind of the question is, when does the U.S. market catch up? And I think partly why it hasn't is just because of the technical factors surrounding the municipal market that we've seen over the past, year or so.
So that's a great question. I think before we move on off this point, one of our other panelists want to make a prediction about when you think the U.S. market might catch up, and or what else we should be thinking about to really drive that international interest? Karen, do you want to weigh in on either of those?
I'd be happy to weigh in on our perspective of speaking with investors, both domestically and internationally. As you know, we're a rating agency, so we evaluate and analyze credit risk. We obviously, credit analysts do not engage in sales or marketing activity, but having said that, we do speak very frequently with investors who have a large appetite for information relating to ESG. And I will share some interesting information with all of you. In 2020, BlackRock's investor study indicated that 88% of global investors rank the environment as a top priority among ESG factors. So we do know that the biggest driver to ESG investing is investor demand. And I will say from our point of view, ESG is an integral part of the research we publish. And as I mentioned earlier, the momentum behind ESG is very real. That impacts all investors. And yes, we are behind other parts of the world, but we, are working to catch up. What we seek to do in our reports is we seek to understand the ESG factors that are most directly material to credit and how issuer management teams mitigate these risks or amplify relevant opportunities. We call this ESG management analysis, and I'll have plenty to say about that a little later in the program.
Okay, great.
Yeah.
Jay, I'm sorry, Tom, go ahead.
Yeah, can I just point out that earlier, actually last year, San Francisco Public Utilities Commission, they were the first municipal issuer to list their green bonds on the Forex exchange. They listed on the London Stock Exchange. They issued the debt as taxable green debt by a municipal issuer. And obviously, San Francisco PUC has been very active in green space, but they had the foresight to recognize the strong demand that Europe has for green debt. And those bonds, when they priced, came at 4 basis points richer versus conventional non-green taxable debt that was issued around the same time by the same issuer. So there is definitely a pricing difference for taxable munis versus, I guess, the tax equivalent. So there is demand globally. I would also point out there's talks about BABS 2.0 coming along with the social infrastructure plan that Health is trying to pass. So that potentially can result in a lot more taxable debt, a lot more demand out of Europe for green paper that's taxable in the future. So something to really consider, I think, as an issuer.
Great. Jay, anything to respond to that before we move on to the topic of third-party verification?
Sure. It may be a little bit redundant and it piggybacks a little bit on Randy's comments, but I think at this point in time, at least where the industry is, there's got to be an economic reason for the issuers to incorporate ESG into their portfolio. And the question, and again, from an operational standpoint, is what's the motivation? If you're getting an economic benefit from issuing, green bonds, for an example, and that's going to drive your local policy to be more green and look at some of your projects to be more environmentally, favorable, then that's great. But if you're already in an organization that is very strong in its environment and its projects are always looking towards that, San Diego and of course the state of California just passed some laws that'll take effect at the beginning of the year that's going to require more electric vehicles. There's going to be big expenses for local governments to have to comply, as you're going to have to get your infrastructure in place, infrastructure being charging stations, for an example, and so forth. So what's really driving it? And, again, if you have access to the market, generally speaking, and no real economic benefit, but you do have a workload associated with it, then what's the incentive other than maybe to say you're the first on the block to have issued a certain kind of bond? there's no real incentive to actually issue, ESG bonds.
Okay. So, and we're going to talk about that again a little bit later as well. I think it's a very valid point. Let's move on to the topic of third-party verification. So if we just go back to our slides quickly for a moment, we asked whether what kind of value people attach to third-party verifiers for ESG or green designations. And we saw that respondents were pretty split with, I think 39% saying they're highly valuable, 38% somewhat valuable, 24% reporting they have little to no value. So that perspective shifts quite significantly depending on where you sit, with 65% of insurers and rating agencies and regulators feeling that that third-party verifiers are extremely or very valuable. Randy and Karen, I'd like to start by getting maybe your thoughts here. Maybe we'll start with Randy to just keep us a little bit on track. But you guys are sitting within the group who's 2 times more likely than others to see value in that, again, in the third-party verification. So what are your thoughts on that, Randy?
I think it's it's interesting. People having been a buy side person at one point. It's very it's much easier for PMs and traders and even analysts to be able to say, okay, this is a green bond and this is not a green bond. So you have the labeling aspect, but I think and maybe this is a distinction that I might be off base on, but I think there's also the view on what does it mean to my overall portfolio from a sustainability and ESG lens. And so I've got green bonds that might or might be labeled, green or not, but I think a lot of institutions, especially larger ones, have their own designated group that focuses on this and sort of looks just sort of through the label. The label is very helpful, but there's more to it, and there's more sort of beneath the surface. I'll give you sort of a quick example that just sort of comes to mind, and it's around social, which I think is the most difficult one to get around. So let's just say, for example, we have a hypothetical city in a hypothetical state that might be in a warm tropical climate, and they spend a significant amount on social programs. I mean, they have their homeless program is extremely well funded, and they have a lot of support for some of the social scourges that affect our society. But they have a situation where their cost of living is extremely sort of outside the traditional sort of metrics. It makes it very affordability is very much an issue. The question is, to an investor, they may see that city as being socially responsible because they're spending a lot of money on social issues. Another person might say, but your affordability is a challenge, which means you're going to have a challenge. I would argue you're more likely to have a challenge with diversity of incomes, diversity of demographics. And so the question is, an investor may have a green bond from that place, but if I sort of say that there's socially, I see a negative sort of attribute to this particular investment, maybe I see it differently. And so I think you have the labeling aspect of the actual security, but then you have different institutions that they have a view on ESG, but they're looking for someone else to be a sort of a third party verifier of their initial thoughts. So I view this as a positive to my a positive attribute in terms of the ESG lens to my portfolio. What does someone else think about this particular aspect? And I think that that's a little bit different than just the labeling of the security. And so you've got sort of multiple viewpoints here. And so I think you're not only looking for the security and how it's sort of labeled, but then what does the actual entity that you're investing in from a disclosure perspective, but also from some of the tangible things they're doing as it relates to sustainability vis-a-vis your own viewpoint as it relates to ESG. So when you start peeling all of that back, it makes it what I would think not a one-size-fits-all sort of approach. And I think I started, when I thought about ESG, when it started coming, I started looking for somebody to be an arbiter of this is a ESG like stamp of approval. And I think that as I thought about this more, I think that's not exactly what we're looking for. I think we're looking for someone to be more of a verifier of other people's views and a sort of almost a balancing point to your own perspective on ESG. if that makes, I'm not sure that any of that makes sense. But the beauty of this is I'm not sure anybody has the answers. Maybe the panelists inside myself do, but I think it's very much early on in the process. Why the survey was very important. Sorry.
Right. And, so I think that topic of third-party, third-party verification is interesting. But Tom, there's also issuers who designate their deals as green or social. So where does greenwashing fit into this discussion when you look at the need for third-party verification?
Yeah, that's a great question. I mean, greenwashing is a hot topic of discussion these days in ESG. And I think it cuts both ways, not just from an issuer standpoint, but also investors alike. Obviously, you read articles about issuers in the corporate market where greenwashing was more prevalent, where bond proceeds were being used for paying dividends, general corporate expenses, et cetera. It's hard to say how rampant greenwashing is in munis, just given how diverse the muni market is in terms of issuers, the size of issuers, and management staff. It's obviously very fragmented from that standpoint as well. And there's obviously a very wide dispersion disclosure amongst issuers as well. But I think you're right. I mean, there's obviously a lot more self-designated, self-labeling of green bonds in the muni market. And there's also a lot of bonds that are not labeled, but may be, from a use of proceeds standpoint, may be green and may actually be a green project on its own. So there's a lot of, I guess, different standards in terms of looking at green from the muni standpoint. But I think that greenwashing, there's very little evidence, I think, from what I can find or research to say that self-labeled issuers are more prone to greenwashing. I don't think that's really has been seen so far. I don't think there's a lot of evidence from that standpoint. I think from what Randy said about having a third-party verifier is good, but obviously there's roughly 50 plus different third-party verifiers out there. So it's not all of them are all created equally. So there's obviously potentially conflicts of interest amongst all these various verifiers. So I think at the end of the day, I think investors need to really do their own homework, whether it be self-labeled or not in this type of marketplace.
Absolutely. And I think, regulatory guidance could be really important in addressing those challenges. If we take a look at the next slide, and let me just make sure we're lined. If we can back up a slide, I think. Yeah, there we go. Regulatory guidance could be really important in addressing things like greenwashing, because the MSRB's announced that they'll be releasing a request for comment that will be focused on addressing both truth and advertising around ESG marketing, as well as recommendations around climate risk disclosures, and that's due out in November or December of this year. And when asked, a significant portion of our respondents felt that the regulators, such as the MSRB or the SEC, should provide that guidance to investors and issuers alike. But more than 54% of respondents said regulators should provide that guidance to issuers, so it's a little bit higher. So Karen, let's start with you. I want to hear from you and Jay on this topic. What are your thoughts on that?
Well, thanks, Janet. I'm not going to comment on the trajectory of regulation, but I will say that investors we speak to who are focused on ESG are highly concerned about greenwashing. And, look, we understand the need for transparency in the ESG space, and we have always advocated for more transparency in the financial markets. But we do feel that regulation is going to have to account for the dynamic nature of ESG issues as they're quickly evolving. And obviously, we have to be careful about the potential unintended consequences, such as ESG integration become merely a check the box exercise, which could actually lead to more greenwashing. So, one of the ways to combat greenwashing is through better and more consistent disclosure. And this is something KBRA is focused on.
Okay, and Jay, as an issuer, what are you thinking about that? I mean, how do you feel about having regulators providing more guidance around ESG?
Well, of course, there's sometimes a fine line between guidance and regulations. And of course, I would be more concerned if they were to actually issue regulations around it. I think guidance is good. It's important to make sure that there's a level playing field. There, especially if you're an infrequent issuer or a smaller entity, having some idea of what's the expectations, what qualifies, and so forth is important. Guidance, along with perhaps education, would be also, I think, very important. But there's also other organizations out there that beyond just an MSRB, such as a GFOA or some of the state GFOA organizations, other professional organizations that could provide guidance so that there becomes maybe an industry standard as people move forward. I think it not only will help the issuers to know what the expectations are, but it will help the investors understand that what they are purchasing, actually qualifies.
Thank you. Okay, there's a lot to unpack there, but let's talk briefly about ratings. If you look at the next slide, it shows that 4 in 10 muni market participants say that it's important for ratings agencies to factor ESG into ratings. That was a number that was 65% among rating agencies themselves, but hovers around just 35% for issuers. Karen, this is an issue obviously near and dear to your heart. So let's start with you. And how is ESG generally factored into credit ratings? And how, if at all, do ESG scores change credit ratings for munis? Can you talk about that a little bit?
I would love to. At KBRA, we don't offer separate ESG scores. And again, this is driven by feedback from investors. Investors often cite that ESG scores are oversimplified, opaque, and that the weightings and methodologies used are often proprietary and subjective. There's a natural subjectivity in these ratings because there's not yet a common definition of what constitutes an ESG investment. It's also very difficult, I think Randy alluded to this a little bit earlier, to weigh social and environmental factors against one another. We've taken the approach of integrating an analysis of credit-relevant ESG issues directly into our credit rating reports. We perform a bespoke analysis of each individual issuer's exposure to ESG risks and opportunities and detail these findings in a section called ESG management. That's something that I mentioned a little bit earlier, and I said I'd get to. We center our ESG commentary around an issuer's strategy for identifying and mitigating ESG risks, as well as planning for ESG opportunities across the broad landscape of ESG issues. We identify the 3 factors that are most likely to be relevant for issuers across government sectors: they're climate change, stakeholder preferences, and cybersecurity.
Great, thank you. That's great. Randy, do you have an opinion on that in terms of how important it is to factor ESG into credit ratings?
I echo kind of what Karen said. I mean, having been at an institutional investment firm, in a prior life, I think that it's important to discuss them in the credit ratings. And I think most of the rating agencies, are somehow trying to incorporate that. And I think, her point, is well taken in terms of trying to, manage all of the factors of ESG and then try to overlay them within the context of a credit rating. I would argue, for example, environmental a lot of times has some impact on a credit rating, but can you really ding a credit because they're located in a place that is prone to these particular environmental situations? Last I checked, for example, let's just say a city along the coast, along the East Coast, that's, sort of low to sea level. that's just where they are. I mean, there's nothing they could really do about it. And arguably, if they are doing something about it, let's say spending a tremendous amount of money on it, that stresses the credit, that actually could be a negative, even though it's a positive maybe for their environmental, approach. So there's a lot of factors that are oftentimes playing against one another. And that's why I would argue that I think a third party that's just focused on ESG, that can provide the level of transparency that investors are looking for, where it's not a credit rating that factors in all the things that come with a credit rating. It's simply focusing only and solely on the ESG component of a particular entity. And then again, I would sort of see the investor, taking that information and applying it against their own approach to ESG, because I'm just not sure that that when you're looking at a rating agency, there's a whole host of other factors outside of ESG that oftentimes could actually be diametrically opposed when you're looking solely at an ESG lens. So I think it's very difficult. But unfortunately, I think Karen and others in her position, they do ratings. And so people come to rating agencies because this is what you do. But at the same time, ESG is a very unique portion of the overall picture of what you're looking at as, from vis-a-vis an issuer or vis-a-vis an investment. So I would argue that there should be some third-party independent solely focused on providing ESG scoring. And frankly, it needs to be, I would say it needs to be tailored, because some investors may be more focused on the social aspect, for example, and so they want factoring in their approach that's very heavily related to social, where someone else may say, I care about governance. But I sort of chuckle. One thing investors will tell you universally about the muni market is they want more disclosure. And so when you're talking about already wanting more disclosure, then and then you sort of ESG laying even more disclosure sort of requirements on issuers that are already trying to keep up with the requests for investors to get that disclosure. And then sort of the last thing, having talked to taxable investors, when you're thinking about corporates, you get quarterlies. The transparency relative to the muni market is not the same as it is. And so you're thinking about that expectation, going back to your previous sort of slides about the taxable investors, they're already sometimes surprised about the transparency that they get, or the disclosure they get in the muni market relative to the corporate market. Now you're asking for, sort of laying ESG on top of it. And so there is a heavy weight to be put on the issuer side of this equation that I think people need to understand. So I would go for a independent sort of third party solely focused on ESG. And then obviously you have your credit ratings and you look at that, and that gives you, I think, more of a full picture.
Well, and I mean, you're teeing us up perfectly here, Randy, for the next part of our conversation, because transparency, as we can see on this next slide, it's a big area of discussion, right, around ESG, and how much of the responsibility for disclosing those ESG risks or opportunities should fall on the issuer. And the survey suggests that most market participants think that quite a bit, in fact. And we had 66% of respondents who said issuer disclosure of ESG risk or opportunities is critical or very important. Somewhat unsurprising, none of the issuers that we spoke to felt that was critical. And we know disclosure is a touchy subject from an issuer's perspective, because of the burden it places on them. So Jay, I'm going to put you on the hot seat here a little bit and ask you, as the issuer in the room, what are your thoughts on that?
Well, first of all, had I responded to your survey, sorry I didn't, I probably would have moved the needle a little bit on those issuers. I'm a very strong proponent of transparency in general. And for those who know, when I was with the city before, I came in during a time of security, fraud investigation by the SEC because of lack of transparency and disclosure, whether it was intentional or unintentional. So, obviously it's a fine line. I may be the oldest person on the panel, and I remember the Y2K timeframe when there's maybe over disclosure, over transparency on how you're preparing for Y2K. But this is sort of an analogous to that. to just make sure that if you either things you're doing in support of ESG or the risks that your community is facing around any of the areas, I think it's very important to be transparent. The question becomes is how much information is enough. I mean that's a caution because you don't want to think that you're disclosing everything and then only find out later that somebody says you didn't disclose something and now there's potential security fraud or the SEC comes in with some enforcement action. As it relates to the city, and maybe it's our experience back in 2006 and 7, we at the city have a customized homepage on EMMA that we've established. And its ESG and sustainability materials are all made available due to the request from institutional investors. We want to make sure that if we're disclosing something to one investor, that the whole market gets to see the same information. And this is also, you can access it through the city's homepage, which will have a link to the EMMA and under the caption of ESG and sustainability. So I think it's important. The question is how much disclosure, how much transparency is going to be required by the market. And then going back to my broken record in terms of price, to the extent that you can see a price differential because you're a good actor, you have done disclosure, I think that will encourage more of the market as well.
Absolutely. And in fact, price was the next thing that we're going to talk about. And we can touch on it briefly. I just want to make sure we have enough time to talk about our last point. But if we move ahead to the pricing slide, we asked people whether they felt within the next 5 years if ESG designations will lower costs for insurers. And respondents were pretty much split right down the middle. About 48% said yes, and the balance said that no or don't know. I mean, I guess, Jay, to follow up on that point, as an issuer, can you look at it as a bit of a down payment to get ahead of the curve, given investor interest is growing in this class?
Well, again, there's no question that ESG should be part of your portfolio at some point. There are clearly trade-offs. The market is growing. With the way the yield curve has been, at least, we talked previously about the taxable versus tax-exempt markets. There clearly could be the economic advantage to do this in a taxable framework. Again, I think a lot of it's going to be hinging on access to the market itself, and the fact that ESG is another niche in the marketplace. I think is clearly important to issuers, and probably even more so to the smaller, less frequent issuers that may have a better story to tell if they're doing ESG financing, because they may have access to a market they may not otherwise have access to. So, but again, pricing is going to be very important, and I think as the market grows and as demand grows, supply will start growing, and I do believe you'll see a price differential that will make it much more attractive.
Tom, I can give you 30 seconds to respond to that before we move on to our last point, if you'd like to.
Sure. I would just point out that at Refinitiv, we price over 1 million securities. So we look at not only credit, interest rates, market color, but we also look at different factors such as ESG and see if that's having any impact on pricing. We did a white paper over the summer to analyze the pricing impact of it having a green designation versus conventional securities. And we looked at 20 largest green issuers year to date. From that analysis, we haven't seen any pricing difference for tax-exempt green bonds versus conventional securities. But again, I firmly believe down the road there will be a pricing difference, but at this point there isn't. I think one of the largest issuers, MTAs, they came to market earlier this year. I think they issued roughly $1 billion in green bonds, came at plus 86 spread, which was pretty much in line with conventional tax-exempt bonds that MTA has. So it hasn't occurred yet, but I think, the muni market's usually a laggard versus other markets. So I would presume down the road there will be a pricing difference.
Great. Well, that brings us to our final data point, I think, in a few, maybe 5 minutes left in our conversation. But if you can go to that final slide, we asked people whether there should be a universal language for ESG in the muni market, and 77% said yes. 58% of issuers said the same. And we saw all sorts of reasons people cited that: increased transparency, to minimize greenwashing, to deliver benefits to investors, drive down cost, et cetera. But this is obviously an interesting topic, right? And how, I guess, to all four panelists, I'd love just a brief response on how do you think the industry potentially comes together to create that language? Who'd like to start us off?
I'm happy to start. I would say that a universal language for the ESG sector would be valuable, but as I said before, as ESG issues evolve, there needs to be room for frameworks and standards to be dynamic. The most pressing ESG issues today will be different 5 and 10 years from now, so it would not be helpful for the space to be overly prescriptive. And then finally, I'd close with saying that a framework for climate-related financial disclosures for the muni space would be helpful.
Great, thank you. Tom, thoughts on there? Jay, who was heading them?
Well, I'll just jump in real quick, and I would agree with Karen. I mean, I think universal language may be too prescriptive. Maybe it's more like boilerplate language. These are maybe some of the components. These are some of the information that should be included. It's probably going to take a bond lawyer to write it on an issue, and that's going to now become the industry standard that you'll see. But again, I think there needs to be a certain level of flexibility depending on the particular issuer and the issue or the projects that are being financed.
Thank you.
Tom,
go ahead.
I would just echo those sentiments. I think I don't think there's one formula that works for every type of issuer or sector. I think all the market players in the muni market have to come together to decide what are the key metrics each and every one wants to see in terms of key metrics, in terms of making sure the issuers are accountable, in terms of meeting certain goals that they've set forth in the bond documents. I think obviously that's going to really have to factor into sectors, geography, so that there's some comparable comparisons that can be made amongst different issuers.
Great. And Randy, we've only got 2 minutes left, but do you want to say any final thoughts before we close this out today?
Yeah, I mean, I think this continues to be a topic that's going to be discussed across all markets, and I think as it relates to the boilerplate and other situations, I think this is one of the things where the muni market is not outside on standing on its own. I mean, you've got ETFs on the equity side that are focused on ESG. You've got corporate investors on the taxable side of the house that are very focused on this. You've got muni investors that are very focused on this. And so I think having, all the regulatory agencies, I think are going to have to be involved, which I actually think will be helpful for the muni market. So it's not a lift on our sort of the participants on their own. So I think this is something that's going to continue to be a point of debate. It's one of the things I find fascinating. There's a lot of kind of dogma out there when it comes to certain things, but this is one area where I don't think anyone really has the answer. And so I think it's important to continuing to ask investors on how they approach it, because it is dynamic, as Karen and Jay both indicated. And I think, continuing to have that, two-way, piece of information, flow of information from an issue, the investor side of the equation. So we, as a guarantee company, but also having an asset manager and being a corporate and a publicly traded company, we spend a lot of time on this, and we think that it's important and well spent. And we appreciate the opportunity with the bond buyer to have this survey and provide the information to the audience today.
Well, great. Thank you. And thank you to all of the panelists, Randy, Tom, Jay, Karen, for the discussion today. And thank you again to Assured Guaranty for partnering with us on the research. And just remember, if you'd like a copy of today's presentation, you can download it directly following our discussion. So thank you, everybody, for joining us. Thank you to the panelists for participating, and have a great day.